All right, let's jump right into it. Thanks everyone for coming in. We got another community trader fade event this week. I believe this is the third or fourth installment. But for those who don't know, this is just basically a weekly event that we're hosting through Samo Coin, where people can come on and present on favorite up and coming projects they really like. And us kind of just discuss and learn a little bit more as to what else is going on out in crypto. I think everyone here is interested in some sort of capacity of just becoming a little bit more informed and aware of what's all out there. So this is a really cool opportunity for, just not myself, Ekim, and any other presenters to do the work and learn and present and share with you, but for everyone to learn and hopefully come away just feeling a little bit more up to speed on things. So with that said, today we are going to be going through two projects. We're going to be doing Hubble Protocol, which I'll go into first, and then Ekim is going to go on. Ekim, correct me if I'm wrong. Veracity.
Yes, sir. Correct.
Awesome. Both of which, have been certainly of conversation in our community, and so yeah, this will be cool to go through. So I'll just kick it off. Hubble Protocol, ticker HBB. Go to the next slide here. So about Hubble Protocol, it is on the DeFi sector. More specifically, it's a protocol on for Solana DeFi that's concentrated on borrowing, lending, and staking. HBB, which is what I'm going to be focusing on, is their ecosystem token, and then USDH is their stablecoin, which we'll get into a bit here. This is a really small cap token. 2.3 million, fully diluted is just about 9 million. It's doing consistently around a quarter million and 24-hour trading volume. All-time high is about $5.10. And like I mentioned, small coin, it's taken quite the drawdown, as many other altcoins have, down more than 95%, 98% from all-time high. Over the past 30 days, it hasn't performed as well as some others, though I think that's going to change. 30-day return is -7%. Max supply is 100 million. Circulating supply is 25 million. It's probably something to be cognizant of, is just that the difference between the two there. They're coming up on 50,000 Twitter followers. The project is just barely a year old. And most notably, in my opinion, they've raised $15 million across a number of different fundraising rounds, and they've raised money from Multicoin Capital, which is most certainly one of the biggest funds in crypto, and well known for their call on Solana and just backing the ecosystem. Delphi Digital, also another really big name. Jump Capital, I think everyone knows who Jump is. Crypto.com Capital, CMS, and many others. So big names backing this project, and for good reason, as I'll be going into in detail here. Project has been audited 5 times. So needless to say, there has been a lot of time and money spent making sure that the protocol doesn't have any exploits or bugs, which is always great. So there's a lot of moving parts to this one. This one's a little bit more of a complicated project, so I tried to do my best to just break it down. So first things first, let's just go into USDH, their core product. It is an over-collateralized, decentralized stablecoin that can be borrowed against crypto assets. So what does that mean? I think most people are aware of your standard stablecoin, be it USDC or Tether, where it's fiat backed, right? It's a one-for-one exchange. These over-collateralized decentralized stablecoins, basically, it's a protocol where people can come in and they can mint the USDH stablecoin in exchange for posting collateral. So the collateral could be Sol, could be Ethereum, it could be Marinade Sol, Sol and C tokens, Caminos K tokens, etc., etc. And the idea is that basically you're posting up collateral to take out a dollar or a single USDH stablecoin in return. And when you're depositing this collateral, you're minting the stablecoin itself. And then when you go to repay the loan, the USDH is burned. Let me know if there's any questions on that. So the uses here for USDH is a store of value to earn yield in Solana. So, for example, USDH is offered on a number of different DeFi platforms. You can purchase USDH or mint it, and then use it in various different parts of the DeFi ecosystem to earn a yield, while also still having that $1 peg. Almost like being in USDC, for example. Obviously, it can be like a medium of exchange to send to other people in the ecosystem. It can be a means of payments. You can earn liquidation rewards with USDH, which we'll go into in a bit here. And then you can earn Hubble native yield, which is also known as HNY, in the form of HBB, which again, HBB is their governance or ecosystem token, and we'll break that down in a bit here. And so where is USDH integrated? Like I mentioned earlier, well, it's on Radium, it's on Orca, it's on Saber, it's on Quarry, Mercurial, Solana, Port, Crema. It's across the vast majority of the Solana DeFi ecosystem. So lots of usage and utility. The HBB token, I just was talking about this. It is their ecosystem token. It's what I'm focusing on or it's what I hit on earlier just a couple slides ago. It is the token for participating in the protocol. So it's like a governance token, or at least once the protocol transitions to a formal DAO, HBB will be that governance token, and holders will be able to decide the future of the protocol. Also with HBB, you can deposit it into the HBB vault to earn USDH rewards generated by the protocol. So you'll see off to the right, and this is just a screenshot taken from their website. There's the HBB vault. I've deposited a bunch of HBB in here, and I'm earning that APR, which is north of 25% at the moment. The AP, the yield that you're generating, it basically reflects rewards approximately 85% that are generated from minting USDH. So the idea is when you go to mint this stable coin, you're going to post collateral. You're also going to pay a small minting fee, and 85% of that fee is going to go to the stakers. So the idea here really is, one of the value accruals for HBB is the more that USDH is integrated into Solana and, presumably other chains, maybe at a later point, the more that people are going to be wanting to mint this stuff, in which turn the fees generated from the minting and the usage of the token is going to be given back to HBB stakers. So really kind of cool concept here. You ultimately want to see USDH adoption grow and usage increase, in which the HBB token is going to accrue value from staking, in addition to being able to be involved in the governance of the protocol itself. And then they have the USDH borrowing vaults. So this is where you can deposit collateral to borrow USDH, and you're going to be paying a stability fee, which is basically kind of like an interest rate. There is no fixed maturity on these, so that's you take out a loan, it's open as long as you want, so long as your collateral doesn't fall and you are forced into a liquidation. With that said, how is the liquidation determined? It's based off of this LTV ratio, which is loan to value ratio, that I'm sure everyone's heard about at some point in their time in crypto. And that's basically just the amount of USDH that's borrowed relative to your collateral value. So an LTV of 80% means that the amount of USDH that you borrow can be at most 80% of your collateral deposited before liquidation. I have an example that I'll be driving it home in a bit here, just in case that doesn't make any sense or people are confused on that. And so, these borrowing vaults have an associated fee. There's a one-time minting fee that I mentioned before. There's the stability fee, which is kind of like an interest rate, and both are denominated in USDH. The minting fee is just going to be added to your debt at the time of mint, and then the stability fee will vary between vaults and is actually adjusted to change or have an influence on USDH demand and supply, which is for pegging purposes, which I'll also hit on here. And so here you can see is a screenshot pulled directly from the app. There's a DeFi treasury vault, where you can deposit a whole bunch of tokens to get USDH. There's no stability fee on that one, as you'll see there. Then there's a Solana pool and the communal pool, and that's for depositing LP tokens that you've already deposited. When you go to deposit collateral or a token into one of those pools, you get an LP token back. Well, through Hubble, you can use that LP token as collateral to pull out USDH. And there's a stability fee on the Solana pool. There isn't one on Camino, but those are subject to change. And then there's this USDH stability vault, and this is for the purposes of liquidation. So basically, the way that the system is designed, you need to be able to pay bad debt if a borrower's collateral falls too low, and you're going to need USDH to fund the liquidation. So an example, right, is say someone deposits one Sol and Sol's trading at $100, and in exchange, they're pulling out 70 USDH or $70 worth, but Sol falls to $85 eventually. If you take that ratio of the 70 USDH or $70 relative to the $85 that your collateral is worth, you're going to have that LTV, that loan to value ratio, above 80%. And so you're going to be forced into liquidation. So you need USDH to be burned, right? Because we talked about this at the beginning, is like when you go to deposit collateral for USDH, you're minting USDH. And so if someone's collateral is basically losing value and they haven't repaid their loan, they have USDH. We need to be able to take USDH out of the system, if you will, to offset that. So the way it works is you'll have these stability vaults where if I own USDH, I'll deposit it in there, and that USDH will be used to fund the liquidation. It will effectively be burned. And in return for me depositing this USDH, I will be getting back the liquidated position, like the collateral from the liquidation, plus a 10% premium to it, as well as HBB tokens, right? So like if I've deposited, let's say $100 worth of USDH and it's being funded for liquidation, I'm going to get $110 back worth of collateral assets. So it could be like $110 worth of SOL, as well as HBB tokens. So the APY from the stability vault, or I think it was also formerly at one point known as the liquidation vault, is part HBB emissions, part that stability fee that people pay for borrowing. You're going to be earning a part of that fee, and then there's this liquidation component to it as well. So as you'll see in the screenshot there, there's like an APR right now of about 31%, which is pretty good for a yield on a stable coin that is designed to be pegged to $1. Of course, there are risks associated with that, which we'll go into here in a bit. So a stable coin, how does this thing, being an over-collateralized decentralized stable coin, maintain its peg stability? So USDH price itself, like anything else, is dictated by demand. So if there's obviously like a lot of buying, USDH will go above $1, and if there's a lot of selling, it'll go below $1. And so they've incorporated this tool, or this not necessarily a tool, but I guess like component to the protocol called the peg stability module, also known as PSM. It was actually originally introduced by MakerDAO, which is like the second largest DeFi protocol in all of crypto. And it's basically designed to offer zero slippage exchange between USDH and USDC. So they want to create this stability module for people to arb out any kind of premium or discount that USDH might have if it were to trade or above or below the peg. That's like one of the components for maintaining its stability, and I could go into pretty deep in depth on that, but it's you want to be cognizant of time. One of the other tools that is used for maintaining the peg stability is the stability fee, um, which can be either increased or decreased based off of USDH demand. So the stability fee, which we've talked about here, is like the interest rate. If the USDH is below $1, they'll increase that fee to drive demand and push USDH back above $1. And then last but not least, there's the Hubble native yield, which we talked about a second ago, HNY, which is a share of the stability fee that is paid to USDH stakers and can also be used to impact USDH demand and accordingly the peg. So if this fee is adjusted upwards, this will drive demand for USDH and return USDH to peg. I think this is honestly probably the most complicated slide of the presentation and most complicated part of the project. So I would say anyone who's confused by this, let me know if you have any questions, but also do some research into it. And again, very similar approach as MakerDAO, which has DAI, their native over collateralized decentralized stablecoin, which is widely used in the Solana, the DeFi ecosystem. I believe it's the fourth largest stablecoin out there. And then at the very bottom, you'll see there is the USDH historical price pulled from, I believe, CoinMarketCap. It's maintained peg to $1 very well. Of course, there's been some instances where it trades at a plus or minus 1% premium, or a premium or discount, but it is by and large, done really well maintaining its peg. And projects like this, it's like the Lindy effect, right? The longer that it sticks around, the stronger it becomes. And so I would suspect if we were to extrapolate this out a couple of years, the variability around $1 or the discount or premium is, it's not nearly as frequent as it is or it has been over the past year or so. So just to recap here, use cases. You can use the protocol to retain collateral upside and then also earn a yield somewhere else. So you can take a loan in USDH and use it across the Solana ecosystem while still having that upside of your Solana if you're using that as collateral to deposit for USDH. You can also earn a yield on your collateral. So you deposit in Hubble to mint USDH and you'll retain exposure through the staking APY, which is something that they're actually going to be introducing pretty soon here. And I'll go into that in a second. You can obviously use this protocol to lever up. So you want to deposit tokens as collateral for USDH, and then you can use that USDH to buy NFTs or coins. Hubble Protocol also allows you to earn from democratized liquidations in USDH minting, which we just talked about a second ago as it relates to HBB, their governance token or ecosystem token, I believe is what it's called right now. And then, of course, the HBB token can be used for governance purposes. Here's just another example, right? I really want to drive this home, like the idea of using the protocol to lever up and still retain your upside. So let's say I own $10,000 worth of SOL and I want to buy more Samo. I want to keep that upside of SOL, but again, I really need that money to buy some more Samo. I'll deposit my SOL into the Hubble vault. I'll get back USDH. Maybe I'll swap that for USDC. Which again, the PSM allows for that, and there's also just strong liquidity in DeFi that you can make that swap very easily. I'll move it to an off ramp, and then maybe I'll like cash it out if I don't use it on Magic Eden, or I don't go to like Jupiter and buy some Samo. Maybe the day comes I eventually get enough money to just kind of pay back the loan, or I'm good with any kind of gains that I've realized. So I'll move it maybe from like fiat to USDC to then USDH, and then I'll repay the loan and I'll get my collateral back. And hopefully Solana has gone up another 300%. So just some quick stats here, and I know I'm going to try and keep this next bit of the presentation short because I want to leave room for eCam. HBB holders is more than 8,000. USDH holders is more than 5,000. The protocol total value locked is more than 5 million. There's nearly $750,000 worth of HBB staked, 3.5 million USDH in circulation. Total liquidation rewards generated to date have been $126,000. Deposited collateral, there's more than 2 million, and then total HBB staking rewards is close to 200K. On the right there, you can see that's an HBB holders chart. Mind you, this project again is only a year old, and it's seen some pretty good growth, needless to say, over the past several months. And I suspect as the market rebounds and DeFi on Solana ramps up, we'll see HBB holders also increase. Real quick, tokenomics and some of the unlocks. I'll let you take a look here. I won't read off each one of these aspects of the tokenomics, but I think the tokenomics are fairly reasonable. I've compared this to just like past projects. They did do quite a good chunk of HBB as a token sale, 30%, which I believe was a mix of private rounds and also a public round. But with, I'm sure, that much of tokens being sold, a lot of people are wondering, what are the unlocks looking like? I actually went ahead and was able to parse out all the unlocks for the rest of this year, and that will actually conclude the token sale part of the HBB tokenomics. So when you add it all up, when all is said and done, we're looking at about 6 million HBB that will unlock over the next 7 months or so. And in total, at current price, it's about $550,000, which is like, obviously a lot, I think, to move the market. But when you consider, I think, the daily trading volume, and also I just went back and looked at some of these other previous, most recent unlocks, it doesn't seem like, people are dumping right into it. I think all things considered, like, although this might be like a modest risk for price, I don't see this as like a material headwind by any means. And, fortunately, a lot of the unlocks or a lot of the token sales had like pretty aggressive vesting and unlocks where it's like they were full vested literally each month over like 12 to 18 months. So what I'm trying to say is a lot of it is behind us. There's still a little bit of a chunk left, but I think in total it's not like material and not a huge concern of mine. So the top three reasons why I'm bullish, I think first and foremost, like stable coins, most people totally forget this, but it's a massive opportunity in crypto. I mean, absolutely huge. In last year alone, there was $6.3 trillion in stablecoin transactions. Just to set the stage, and you can see on the right there, there's a chart that shows aggregate stablecoin market cap across the biggest stablecoins. But stablecoin market cap went from $10 million in 2017 to today about close to $150 billion. Again, people just completely neglect the usefulness of stablecoins, not just in crypto, but also increasingly more in the real world. And, I think real world assets too, as those so to gain popularity and traction, as I talked about in the centrifuge trader fade. And Solana right now is actually fifth in terms of stablecoins with close to $1.8 billion worth of stablecoins on the chain, and I suspect that's only going to grow larger. So, what I'm saying here is basically stablecoins is a huge opportunity. Solana has seen some good growth. For USDH and HBB to take a bite out of that, I mean, it could translate into some material upside for the Hubble Protocol project. Another reason, as always, I'm a narrative investor. I think you should be. I think that the narratives around this project are really strong, and the interest is also strong. So some of the narratives, Solana and Solana DeFi. I mean, everyone here probably agrees Solana is, again, it can continue to prove itself as the next best alternative to Ethereum. And I also think that Solana DeFi is an emerging sector within Solana that is seen some really good growth. Obviously, it was crushed by the whole FTX debacle, but needless to say, there's lots of strong builders. And I know that given the strength of Solana right now and just the extrapolate from here, we're going to see Solana DeFi really rise from the ashes. And I think that will bode well for Hubble Protocol for all sorts of reasons. I also think that it's a good like analogy or like comparison is like it's like the MakerDAO of Solana. Anyone who doesn't know what MakerDAO is, I would strongly suggest you just go on YouTube, look at some videos, or maybe we'll do one on a Trader Fade on it. But this is like the behemoth of DeFi. It is the second largest DeFi protocol. 7 billion in total value locked. I mean, they're working with like real banks. They're being integrated into real world assets. I mean, like Block Tower, one of the biggest crypto funds, is working closely with them. I mean, yeah, MakerDAO is just an absolute behemoth of DeFi, and the Hubble is trying to basically not that they're trying to be, but a good kind of like a good comparison is that it's like the MakerDAO of Solana, which I think could do well in the next bull cycle as a narrative. And then, of course, it's a decentralized stablecoin out of the reach of regulators. I think this comes at a really interesting time. This week we saw the whole BUSD and SEC kind of um, like headwind. I don't want to say debate, but obviously that's been like the talk of the town as of late, right? The SEC is kind of going after BUSD. That's resulted in some people being fearful of other fiat-backed stablecoins. You could kind of see this in the BUSD relative to USDT trading pair, where BUSD was trading at a discount for a bit. And then also there is the whole like Tornado Cash and Circle freezing blacklisted wallets. I mean, the short of it, right, is that like fiat-backed stablecoins are really great for like payment and whatnot and a few other things, but they're also not out of reach of regulators. And so having a decentralized alternative could be, it most certainly is going to be necessary. So some headlines there in the bottom right, and then on the left, that is TVL of Solana. Obviously, it's gotten decimated, as we all know, but it's most certainly not dead. And I think that over the next few years, we'll just see that number go up, and I'm sure along with it, Hubble's TVL as well. All right, I'm going to try and ramp it up here just because I'm coming up on time. Other reasons why, the last reason why I'm bullish, again, highly integrated, and then the Camino Finance backing. So, USDH continues to be integrated across all of Solana DeFi. I think that as integrations continue to pick up alongside the Solana DeFi, just broader adoption, we'll also see Hubble be able to realize compounding benefits. And then on the Camino side of things, I do think that as like Camino starts to gain meaningful traction and usage, USDH will also benefit, and so will HBB by extension. For those of you who don't know which Camino is, we actually did a Twitter Spaces with them yesterday, and we'll have a video up shortly on our YouTube. But they're an automated liquidity solution built off of DEXs that are operating the concentrated liquidity market makers, and that is, Orca is the obviously pinnacle and epitome of that. Camino's done really well. Orca is obviously like a behemoth, as you can see in the bottom left there. I just pulled this data from Jupiter. Monthly volume over the past 30 days, Orca's done close to more than 350 million. And then number two is Radium at 110 million. So the fact that Camino is doing really well and it's building off of Orca, which is already a powerhouse, I think it could translate well for HBB. So potential catalyst, I pulled this from their Git book and was able to find this elsewhere, but the protocol plans to launch various products and services to bring further utility to the platform and USDH itself. Don't really know what that means other than more utility, which is obviously good. Also, they mentioned in their Git book, in the future, you'll be able to have your capital allocated to partner protocols to earn a yield. So say you deposit Sol, or you deposit some other coin that can then be put in a pool of sorts, or maybe you have like Sol and you want to still be able to earn that yield from staking it. They're going to allow for that to be supported, and which is actually cool because that additional yield will actually mean that your LTV ratio will improve with time. So that's a really kind of cool feature. Another feature for upcoming maybe Catalyst, per their Git book, is they said that in the future, users will have the ability to allocate their collateral assets to various yield strategies, which will utilize their assets in one of Hubble's partner protocols. So further integration, more utility, which is great. They also mentioned they're going to add additional vaults with stability fees, and of course, more stability fees will mean that the protocol generates more revenue, and it goes back to token holders. And then, of course, like more Camino and Hubble synergies being realized. As I mentioned, Camino's been doing really well. I suspect they'll continue to do well, and that obviously means that Hubble will benefit accordingly. Getting close to the end here. So this is a screenshot going in just to the technical setup. I'll draw your eyes to two moving averages first and foremost. We've got the 200-day moving average, which is at close to 14 cents. And then the 50-day moving average, which is a little under 9 cents. And so for much of this year, HBB has actually been respecting the 50-day moving average. It's been looking like it's pretty good support so far. It's teetered a little bit below it every now and then, but by and large, it's held support really well, which is potentially bullish. Hasn't come up and tested the 200-day in a minute, but I do think that in this kind of like symmetrical triangle that it seems to have formed, I think between now and March, there's a decent chance that it breaks to the upside, and maybe we do test that 200-day moving average, which might be around 13.5 cents by the time that comes. So what I think, just back of the envelope math, that's probably like implies maybe like a 50-60% gain if we do see a break to the upside. And then looking at the bottom there, you'll see the 14-day RSI. Looks like it's in a pretty decent, strong uptrend since November when it hit lows that coincided with the FTX collapse. I would think that if the support holds, and it looks like it's holding, it's going to be sending the RSI to overbought territory, which would be consistent with HBB breaking out to the upside and maybe even going up and testing that 200-day moving average. So nonetheless, I like where this token is right now. Of course, in my mind, I'm thinking it could go lower, but I do think there's a bias to the upside, all things considered. Price targets, returns to an all-time high. That implies a 55x return. And then if we just, kind of make some assumptions as far as, if Hubble is kind of the MakerDAO of Solana, like what does that imply if it's able to make up some sort of share of MakerDAO? So Maker MKR, the token is currently valued at $750 million. A 1% share of that would imply that HBB does a 3x from current levels, which is like really attractive. I mean, 1%, that's like nothing. If it's able to be about 5% of the size, that means HBB could do a 15x from current levels. If it's about 10% of the same size as MakerDAO or MKR, that's a 30x from current levels. Now, where it really gets wonky is, if we assume Maker also goes back to its all-time high, which is $5.6 billion, obviously, like those returns get juicier, and I'm sure Hubble is obviously going to appreciate, just because that would imply that the bull market is on. But 1% share to 10% share, it implies anywhere from doing a 23x to a 225x. Of course, this is just like me totally throwing my finger up in the air. There's no way of knowing for sure whether or not this will happen. No guarantee of any sorts, but just trying to wrap our head around, like, if this protocol is able to kind of mimic MakerDAO and at best be just a tenth of the size, like the returns from current levels are fairly attractive. I believe. How many more do I have? 2 more slides. Sorry, Kim. I know I'm taking a hot minute here.
You're good, man.
Actually, I don't know if I can go back. Can I go back? There we go. Competitors, I don't really want to say MakerDAO is a competitor, but maybe technically it is. So Maker MKR is the protocol's governance token. DAI is the protocol's stablecoin. Again, it's an over-collateralized, decentralized stablecoin. Then there's UXD protocol on Solana, which is another name that's backed by Multicoin, who are investors in Hubble. And it's a really interesting project. I suggest people look into it, but that's also a decentralized stablecoin. The difference is that it's backed by 100% delta neutral positions. So they basically use on-chain perpetual futures to create an on-chain delta neutral position that is stable in dollar terms, which allows for that their UXDX stablecoin to maintain its $1 peg. And then, somewhat like Hubble, they have a governance token or an ecosystem token, UXP, which controls the UXD DAO and has a say or influence over how fees generated from that protocol are used. So last bit here, the risks, liquidity crunch. So if crypto markets fall enough and the collateral behind USDH falls below the redeemable value of tokens in circulation, that could result in a bank run on the stablecoin or just a massive depegging. So it's nice that the stablecoin is over collateralized. It creates a bit of a cushion. It's not like an algorithmic stablecoin where like a depegging and subsequent like complete like death spiral collapse could follow suit. But it is possible that you see some sort of steep depegging, a bank run, and that weighs on sentiment and could put the project under. What has me really bullish on this project is that they have launching a year ago. I mean, they literally they launched at the peak or top of the start of the bear market, and they've been able to do really well all the way through it, even through the FTX collapse. So, like in my mind, I'm like, wow, if they've survived this long, like I'm sure they'll be able to keep pushing forward and probably even survive the next bear market. But of course, liquidity crunch is always a risk. There is regulatory risk, not so much like your USDC, but regulators could outright just say, hey, like you touch a DeFi protocol, it's illegal. You can't do that. There's smart contract risk. Like I mentioned, Hubble has been audited 5 times. Of course, there is, you can't always be 99, you can't be 100% sure of anything. So there's always a chance that there is some sort of bug or exploit out there that exists. But again, they have been audited several times. And then, as I mentioned, when talking about the tokenomics, there's a risk that early investors de-risk. There's still a small chunk of unvested tokens that went to private round investors that could translate into some selling pressure over the next 7 months. I don't really see that as a massive risk, but it is one. Okay, cool. That was my whole bit. I know that was a ton. There was a lot of moving parts. Again, this is all going to be recorded, so I'd say go back and watch it again, or throw any questions that you have, or just go even play around with the platform. But this is, in my opinion, one of the coolest projects I think on Solana DeFi, and one that I think is really positioned to do well. And so, yeah, check it out. Let me know if you have any questions.
And then real quick, before Ekim, you fire up, for anybody listening right now, we do have TipLink in the audience with us. So as a thank you for listening, we're going to start doing a little bit more. And Ekim, I'm not going to take too much time, don't worry. We have partnered up with them, and we are going to release what they call the TipLink game. And if you are listening, we'll retweet it. Go to the tweet, click on the link involved, and the secret word for today's broadcast is good Samo. Not sure if there's anything else you want to add there, Greg.
No, that will be all of it there. If you just give me like a minute, maybe I'll send that tweet out and you guys can go ahead and retweet it. I was literally just messing with the values there to get everything set right, but looks like we are good to go now.
Awesome. Yeah. And then one more time, the secret phrase for listeners today is going to be good Samo. So enjoy some Samo, and Ekim, take it away.
Quick question: is there a space in that, or is that just one word?
Yes, there is a space. All lowercase will be your best bet, but I did put in some other cases just in case people decide to capitalize.
Sweet.
Just one more time, good Samo with the space in between.
Got it. And that's on the TipLink Twitter, and we'll be retweeting that from the Samo Twitter.
Yes, I will be
Correct.
putting that in the general chat right in
Sweet.
like a second here.
Sweet.
Awesome.
All right, cool.
Thank you.
I guess I can just get it running while you guys post that. So here we go. For today's, or I guess this week's Trader Fade, I'm going to be covering Verasity. This is kind of like I don't know. I don't want to say like a unique project, but it's definitely one that, you know, you don't see a lot about and you don't hear a lot about. There's a lot of DeFi and crypto, right? And like GSS just went over, it's super advanced. There's a lot to take in. Number one, it's important to understand everything, and number two, it's kind of like complex. You have to take a step back sometimes. But with this project, it's a little different. I'm gonna go into it, but it's kind of focused on like ad sharing and video streaming. And they also have a couple of other sectors that they're going into. So Veracity's mission, they're pretty much just a product layer platform. They've been focusing more on esports as of recent, but they also go into video entertainment and streaming. They are focused on engagement and entertainment monetization for certain video publishers. They've tried to focus on more video platforms like YouTube, for example, but they also integrated into Twitch, Vimeo with their software developer kits. They do have a patent with their proof of view protocol, where pretty much it's incentivizing advertisers to trust the blockchain to verify that viewers are real and they're not bots. So a lot of issues with current ad fraud in the industry, for example YouTube, people are essentially link farming, or they'll just spam a bunch of bots to view videos, and it's not exactly 100% transparent when viewing videos. So for example, if you click on a YouTube video and it has 100 million views, you're not exactly 100% sure that those 100 million views are true, right? They could be bot, like, so obviously some of them are going to be bots no matter what. But with this proof of view or POV patent that Verasity has, it kind of solves that issue. But we'll go into ad fraud and what type of money is involved in that, what they're trying to solve. So the sector that Veracity's in is kind of the entertainment or advertising sector. Again, that's not one that you see very common with crypto, right? You're mostly seeing DeFi protocols. A ton of NFTs are popping up and stuff. But you don't really see a lot of protocols trying to solve more real world issues, especially ones that exist in Web 2 currently. So Veracity is an interesting one. I think that's one of the biggest benefits of doing these trader fades is kind of like, I didn't know anything about Veracity. It was one that's been on my radar since the last bull run, but it's kind of cool to just go into different sectors and flesh through all of this info and really get down to like, what is this project about and what are they trying to solve? They're sitting at a $100 million market cap currently. I'll go into the tokenomics. It doesn't look great off of this slide, I'm not going to lie, but it'll make sense when I go into the next few slides. Their fully diluted market cap is 1 billion, which sounds horrible again, but it's not too bad. Trading volume is sitting at 40 million as of a couple of minutes ago when I checked. We're sitting at just under a cent for the current price, with an all-time high of 8.5 cents. It's done really well in the last month. I know it's up a good decent chunk today. I don't know whatever's going on with the Fed and the CPI print. They're up 220% in the last 30 days. You got a max supply of 110 billion. 90 billion of that 110 is actually locked up. They got a current circulating supply of 10 billion. Twitter follows is actually really great with 280K. That's mainly like a lot of a lot of their community is on Reddit or Twitter, which is kind of interesting. There's not really much of a Discord following or a Telegram following with them. So yeah, a bunch of Twitter followers, and they launched in 2018. So what is Veracity? They're essentially trying to revolutionize esports, ad tech. They've just gotten into the NFT space, and they're all trying to do this with their their application of their patent in the blockchain itself, and they're just trying to capitalize on these rapidly growing industries. For example, video streaming, live streaming now with Twitch, and platforms like YouTube as well. They're just trying to use that and capture some market share there. They have 3 main focuses of the project. They're also, I've noticed from reading, past Medium articles with them, because that's mainly their blog sources, like their Medium page. They tend to kind of flow with whatever's hot, right? So like we'll see NFTs pop up, and they're trying to integrate NFTs into their platform. And they've also, over the last year and a half, really tried to focus on esports. They came out of the gate using their Vera views, which I'll go over in a second, but they've kind of expanded into other industries as well, trying to just capture more people and users. So the first one is Vera Views. It is their open ledger advertising system, and it's built around their POV, or proof of view, fraud identification tech. They actually have a patent in the US and China for this technology. I believe they got the US patent before 2022, and I know at the beginning of 2022 they got their China one approved. And I'll go over that in the next couple of slides as well. They are also integrated into Brightcove. Brightcove is a company that has a bunch of technology. I want to say like integrations, but allows, like, for example, if you post like a link, like a YouTube link on a website or something, you'll see a thumbnail, and you can actually view and interact with the video within the website. Brightcove is also one of like the major players with that, right? So they can integrate different video streamers, not only YouTube, but like Vimeo or Twitter or whatever. So VRA is kind of like integrated with them, trying to capture some market share there and have their POV integrated into those. They also have the Vera wallet, which is essentially just the Verasity wallet that allows you to stake Verasity, send it. You can buy, I believe they have different integrations with payment platforms. That way you can use a credit card, etc. Yeah, that's pretty much. I didn't really go into depth with the wallet, but it is interesting. I think that's the only way you can stake your Verasity or VRA. So, and then more recently, they integrated into the esports realm. They partnered with some games like PUBG Mobile, even CS:GO, which I know is a little old by now, and Athena Gaming, which I'm not too familiar with. But they are trying to essentially integrate esports viewership and content creators to use VRA and earn. So essentially, if you're viewing a content creator playing a game, you can, host, giveaways. You can also host like tournaments using VRA. So we're just trying to integrate the coin more into, the platform itself, kind of taking on a Twitch approach there. And that's one of the risks I have in the later part of the presentation. But they are going against some big players in the industry. I know YouTube and Twitch is something you don't want to mess with, but they are trying to capture some of that market share, and even integrate into those platforms if needed. So let's go over the VRA token itself and some of the tokenomics. So essentially what you can do is you could stake your VRA in the Vera wallet for around a 19% return. I believe that yield is through 2023. I think it's March or April of 2023. They extended it in 2022, I believe, and they might extend it further. I know they had to change it based on the emission schedule. So, a couple of months from now, we might see a different staking APR, but, needless to say, you can earn some yield there. For the tokenomics, they do burn. So they do buybacks and burns from their advertising revenue. So far, 50 million tokens, which is relatively small considering the huge supply. But obviously, that will be increasing over time with revenue from their advertising system. 10.3 is currently in circulating supply. And then this is where it gets interesting. So out of the 110 billion tokens in total supply, 90 billion are used in the VeraView ad stack backend. So those are never going to be touching circulation, which can't really affect price. Which is also like great to hear, because as soon as I was looking into this project, I was like, like it's got 10 billion circulating and 100 billion total. Like, what happens when those dump into the market? Price could see a significant drop there. So, needless to say, that's nice to hear. Those won't be hitting the market at all. And then with the total supply, that's taking account the 10 in circulation, the 10 billion. That is essentially their war chest for corporate acquisitions. For example, if they want to buy out a company or whatnot, they can use that. And then obviously the 90 billion that's locked up for their ad stack. Why I'm bullish on VRA and Verasity, they're solving like a huge issue that I think not a lot of people know about in the industry of video streaming and sharing. I did some research, and on their white paper, they link to Statista research department, which essentially did like a huge study into ad fraud, globally, but also in the U.S. I think they were mainly focused in the U.S. And in 2022, roughly $80 billion was used in ad fraud. So, for example, out of the entire share of people advertising, $80 billion was essentially wasted to bots or link farms that aren't actually reaching real people, real viewers. So, for example, if you want to advertise on YouTube, you go through YouTube's platform, the content creator gets paid, and also the viewer watches these advertisements, and that's how the whole system kind of works there. So YouTube takes a cut of that, right? And then the content creator takes a cut. I think YouTube is somewhere around like 40%, which is kind of ridiculous when you think about it. But that's why they're so massive today. With Veracity's POV or proof of view tech, it allows content creators, viewers, advertising agencies to use the blockchain itself and verify with their patented proof of view tech that these are not from bots. Like the viewers are not from bots, not fake. They're all 100% real, which gives more transparency to the platform itself. For example, if YouTube were to integrate this, they would know that 100% of their viewers are not bots, and they're actually real people watching this and taking in the ads. Also, they do have a patent in the US and China, which is pretty bullish to me. When I read that, I was like, wow, okay, I'm pretty surprised. I looked further into it. You can, if you're interested, I didn't want to like bore you guys with the whole like 15-page document or anything, but they do have it linked on their white paper. Essentially, what it does is, and they have a whole video as well that really goes in depth there and explains it. But they're essentially trying to intercept the $120 billion advertising industry. China is, let me see here. I think China is number 2 in terms of advertising revenue, and the US is coming in first. And they also, it kind of proves here that to get a patent, you're no joke, right? You can't just pull up, get a patent. They put hard work into this time, effort to get these patents, and that kind of just proves to you that they're ready to deploy some of these technologies, and they're serious about the POV, proof of view protocol that they have. Going over to competitors, I'd say Theta is by far their competitor here. YouTube is kind of like, it's a weird one, right? Like you don't see a lot of ad tech or entertainment cryptocurrencies, right? So Theta is a huge one, surprisingly. I was thinking about doing Theta for this week, but instead I went with Verasity. It's a little smaller of a market cap, so maybe there's a bigger return with Verasity. But Theta is doing a similar thing, yet they're trying to provide solutions to traditional video streaming sectors such as YouTube and Twitch. And then obviously there's YouTube as a competitor itself. I could have put Twitch, I could have put a billion of these different platforms. But I think YouTube obviously is a huge player in the game when they're trying to capture some of that market share. Just going through some TA. I'm not like a trader or anything, but definitely something to keep your eye on here. After their all-time high, we saw a pretty brutal drop all throughout 2022, as you know we saw with the majority of coins. I'm not gonna lie. But start of 2023, I mean, it's done really well, jumping from I don't know what this low is here because all my things are messed up, but I believe they were at 0.004 or like almost under half a cent. They jumped up to, now almost a cent. I believe they might be at a cent as of, presenting right now. But, we have a couple of resistance lines, broke through the resistance set kind of late 2022 with this rally here. And I expect it to do really well in the next bull run. Again, it's kind of like a strange sector. Like you don't hear a lot about it. And so maybe it picks up traction. Maybe that's a narrative that catches on. But either way, I'm not buying exactly right here. I'm kind of waiting for a little pullback. And maybe, we don't see that as much as I hope we do because I'm not in it. But going over some price predictions, I'm not one to like go crazy with the price predictions. I kind of just look at like, what does it take to go to, back to the all-time high. And obviously anything after that is kind of speculation. I expect it to go back to the all-time high, but we'll see. With the return of an all-time high, we'd see about a 9x or a 900% return, which is still really great. Through looking at different projects in the last, 2 months now, that I've really been like putting my head down and looking at a bunch of projects for the next bull run. Mainly the ones that I'm looking at are kind of ones that are 10x to their all-time highs. Some of them, for example, the AI sector that I covered a couple weeks ago on the Trader Fade, those have done insanely well over the last few weeks. And some of them are only like a 4x the all-time high, so it's not as attractive. And like GSS presented before, with Hubble, some of the all-time highs, or even like taking a certain percentage of MakerDAO, is going to do really well. I can see that maybe for Verasity as well, taking some of the share from Theta. I haven't heard a ton of things from Theta, so maybe they, Verasity makes some noise in the upcoming bull run. They do really well. But needless to say, that's a 9x at the all-time high, and if we blow past that, you're easy 10x there. So some of the downsides and risks involved with Verasity, they are trying to go after some massive players in the industry. YouTube is no joke. Twitch, all these video streaming platforms, so massive. People are so used to using these platforms that it's kind of hard for them to switch off, right? If you're so used to, for example, if you've used YouTube, for example, for me, I've used it at least for the last, like, I don't know, I want to say decade, man. I mean, my account has all my history, knows exactly what I want to watch. I got my favorite channels. That's going to be tough for people to kind of transition out of that. So maybe Verasity can capture some of YouTube's users using the proof of view technology in YouTube itself and not getting them off of the platform. But obviously it's going to be hard to take some of that market share. I think a huge potential for them is integrating into Web 2 platforms like YouTube, and really giving it a spice of Web 3 with VRA integrated within. I think that could be like a super interesting concept where you see, I've talked about this as well before, but it's like if you can integrate Web 3 into Web 2 and have Web 2 users not know it's Web 3, at least for now, I think that's a great route to take, because not to say that crypto has, maybe I don't want to say like they have a bad reputation, but like when I talk about crypto to other people that don't know crypto, it's like way too advanced for them. They're like, they immediately just like turn their ear off to me. But maybe they can integrate in and have people use VRA even though they don't know they're using VRA. And then another one I have listed here is their integrations are quite limited. I know they had the Bright Cove integration that they partnered with them. Like I talked about before, Brightcove's a company that's focused on reliable, scalable, and secure video technology solutions, and that's in mobile as well as desktop views. So maybe that's a risk for me. I need to see more of an integration into different platforms, and I expect that over the next couple of years heading into the next bull run. But that's they can't succeed if they don't integrate, right? Like they need viewers, they need people to use the token for them to succeed. So that's definitely a downside for me. But I'm hopeful in the next couple of years that they can do well there. And then ending, just use my sources. I highly suggest anyone to check out their white paper. It was a great read, and they also have some really great Medium articles if you're interested. And a couple of YouTube videos that go into depth onto their tokenomics and their proof of view technology that's patented. So highly suggest you guys check it out. That was my small little presentation. I know we're over time here. But yeah, that was that.
Awesome, man. I mean, yeah, some serious competition, but I think it's a market that has a ton of eyes on it, and I like that they have other options outside of like, we're going to launch our own streaming platform. I think that's when things get a little more difficult. Right. If you actually try launching just like an entire platform and try to go toe-to-toe with YouTube, pretty tough. Yeah. But the fact that like they have this like proof of viewership protocol, I think that's something which, like you said, you can kind of piecemeal it in to existing streaming platforms already, which makes adoption way easier. And then it kind of just like adds that catalyst point of like, if they do get adopted into something like YouTube or like like Vimeo or something, you just like the amount of users gained just like instantly explodes. So yeah, I mean, high risk, high reward. Sounds awesome though. Thanks for presenting on that. I mean, I'd never heard about it, so yeah, I love hearing about stuff that I'd never heard of.
That's why I kind of like enjoy to kind of pick the more risky ones, I guess, or like the more rare gems, if you want to say that. But it's there's a lot of interesting stuff going on. And I think that's why we do these trader fades. In no means am I an expert on the protocol itself. I kind of just look into it for a couple of days, put together these slides, and I highly suggest if anyone else has a project or a suggestion or they want to present or whatnot, feel free. It definitely takes a little bit of work to research, but I think and like I think Swick has said this as well, it's kind of nice to be not forced into, but like you got to put a presentation on, so you kind of have to understand the underlying protocol and what it does, and you don't just ape into some coin without knowing what it does. So super useful. I love Trader Fade. And yeah, I just went with a random coin that not a lot of people have heard about. Been on my radar, but I didn't really know much about it. So yeah.
Well, now you do. Yeah. Awesome. And again, for anybody that listened, remember the code is good Samo. We just had a Goon Machine posted down in the Discord, so feel free to hop over. Thanks again for joining us, and we of course will be back next week. But just a quick reminder, while our faces are probably pretty familiar now, it's been myself, GSS, and Ekim presenting on these. This is an open platform, so if you have a project you like, doesn't matter how big it is, how small it is, whether it launched in 2017 or launched as February 17th, feel free to present on it. Let us know, and we'd love to have you guys up here.
Awesome. Good presentation.
Awesome, man. Can't wait to have you up here, Simdope. I know you're next.
For sure.
Awesome. Well, without further ado, thanks again, everybody, and we'll talk to you soon. Thanks for joining.